Well, Francis Mwangi, Head of Research at Standard Investment Bank, is standing by now, so let's delve into the market space. Francis, thanks for joining us. In fact, let's kick off with a look at the shilling, because they're hitting an intraday low today of 87.80, 88 against the US dollar, and that would be a one-year low. So what are your thoughts right now on the outlook for the shilling? The central bank showing today that it will step into the market and help prop up the shilling, but to what extent is it going to be able to do this if there is kind of all the forces moving against the shilling right now?
Okay, thank you. In terms of outlook for the shilling, yes, you're correct. You've seen quite a bit of imported demand coming in, as has been customary towards the end of the month. But in terms of outlook, our thinking is that we should still remain within the 86, 87 range. Again, government intervention can only work for so long. Again, if you look at the amount of import cover that we have, we're at currently 5 months, which is still below the target 6 months. So I think the central bank can only intervene for so long. So 86, 87 range seems likely for the next month or so.
Looking at the overall market, pretty much flat on the day, but what stood out for you in terms of big movers on the day?
Well, the big movers for today, we saw Safaricom. Again, has been the big mover for the last 2 weeks or so. Again, carrying from what we saw last week, a lot of profit taking by foreign investors. I think today we touch an intraday low of 5.25 shillings, which is around 12% dip from the start of the year. The other top movers for today was Kenya Commercial Bank, Equity Bank, and East African Breweries. And for the latter, the three, we've seen stable foreign investor trading, and the prices have remained stable.
Just looking at the role of foreign investors right now, of course, an interesting trend we're seeing across Africa, but certainly is one that's affecting the Nairobi Stock Exchange, is the amount of money that foreigners are putting into the NSE. I mean, in the fourth quarter of last year, foreign inflows rising by 130%. That's according to Pine Bridge Investments. So to what extent do you need to be looking at what foreigners are doing and looking at the stocks they're buying and their kind of where their heads are at when it comes to investing in Africa, to be able to look at which stocks are good opportunities right now to buy into?
Well, correct. Yeah, foreign investor inflows for 2012 were at a high of 5 years. And what have they been buying? The main names that foreigners are looking at are your large cap stocks. So your Safaricom, Kenya Commercial Bank, Equity Bank, British American, and yeah, your EABL, then you have BAT in there. So I think so far the wide collection of investment has been on the large caps, and the main attraction has been 2011 was a year where we saw the market declining 28%. We saw strong corporate earnings in 2012. So most of the companies listed on the market still look at attractive multiples. We are looking at multiples for the entire market of 9 times PE against 2012 earnings. So I think the common consensus so far is that market still looks attractive based on multiples, and outlook with respect to corporate earnings in 2013 still looks upbeat.
From Standard Investment's perspective right now, which stocks would you say are positioned for the strongest returns to shareholders this year?
For this year, we're still optimistic about banking stocks. Again, if you look at the revolution that has been happening in the banking industry for the last 5 years, is adoption of mobile banking. So banks are actually tapping more into the rural population that is unbanked in a more efficient way. Then banks are also only now starting to reap from their regional expansion that they have undertaken in the last 5 years. So our overall feel for 2013 is that banking stocks will still yield better returns, both in respect of capital gains and dividend yield.
Yeah. Just looking at one of the stocks that has caught investors' attention is the power firm KPLC. They've introduced that new automated billing system, and of course we know there's a power deficit in the region and the opportunities that are presented as a result of this. Is this a stock that you've got your eye on this year? Do you think, I mean, Old Mutual came out with a bullish note on the company. Do you think that it's positioned well right now?
Yes, but again, like anywhere in the world, when talking about utility companies, you should only be keen on KPLC as a long-term play. Compared to other countries where you look at a utility as a high dividend paying stock, the difference in the Kenyan market, specifically with Kenya Power, is the company is still investing. So the dividend payout we project will remain fairly low, and the amount of return that the company generates to shareholders is still fairly low because the end user tariff prices are still controlled by the government. So yes, I think investors should have it in their portfolio, but as definitely a long-term play.